Welcome everybody back to Liquid Lunch, powered by CryptoQuant, the leader in on-chain data analytics and a platform to help the adoption of crypto worldwide. And today I am super excited about our guest, Leah Wald from Valkyrie. She's going to be with us today. We're going to be talking on-chain data analytics. Leah, welcome to the program. Thank you for joining us this morning. You've got a cool shirt on. You maybe want to show the guests real quick.
Well, it's awesome being on a beach with you guys this morning. I didn't think that, I'd be at the ocean at 9 a.m. in the morning. So this is a great morning. Thank you so much for having me on. Sorry, it is kind of an old school mempool space shirt. I thought it was appropriate for today.
I love it. I love it. The OG Bitcoin vibe. And then, of course, we also have the CEO of CryptoQuant, Key Young. Welcome, Key. How are you, sir?
Pretty good. How are you? Good morning,
Doing good,
guys.
doing good. And then, of course, we have Julio, our main quant research guy, who's going to be going through some on-chain data analytics this morning. So we'll start with that, and then we'll get into some details about Valkyrie, about Leah's crypto journey, and see all that exciting stuff after that. So Julio, you want to start us off and maybe get into the report?
Yeah, sure. Thank you. This is a report that we wrote this week. And here we were discussing the miner activity and how our miners are doing, Bitcoin miners. And so we start with looking at what they're doing in terms of selling. And so we are tracking now these miners selling to OTC desks. And so you can see that, they mainly did some selling on November, December. That's when we saw that spike. But so far this year, we haven't really seen any meaningful selling for miners. Of course, they're always selling, right? Because they need to pay for operating expenses. But when there's this type of spikes, I think that they try to manage their treasury, right, and maybe get a little bit of extra cash, right? And so right now, so far this year, even with prices declining after the ETF launch, we really haven't seen any big spikes on miners selling through OTC desks. So this tracks mostly those big companies, right? Big companies, big miners that sell through OTC desks. And so even looking at the companies' activities and holdings on chain that we are tracking, you can see that, for example, this is just an example, Marathon and Riot, their holdings over time increasing, actually, right? So these companies really holding more and more Bitcoin. So we're not really seeing some selling from these companies. And that's, I wanted to discuss this because, it's remarkable, right? That some of these miners aren't selling even after we've seen their profits decrease so far this year, I would say, because mostly, and we're going to see that ahead, because fees were really high on November, December, right? And then this year they have come down significantly. And so this is a metric that we use to track that, like the revenue of miners, how is it growing? And also, but comparing that to the mining difficulty, which is like a proxy for mining cost. And so we're comparing the growth of these two metrics and building this new metric that tracks that. And you can see here, like right now, after the fees decrease, we see that their miners are being extremely underpaid right now. But that's why I wanted to point out that it's remarkable that we're not seeing actually a lot of selling from miners. And yeah, this was because transactions have also decreased so far this year. We have a lot of transaction activity on November, December due to inscriptions, to BRC20 tokens, and now they have come down significantly. So transactions are down, and you can see that. Why do we say that? It's because of lower inscription and BRC20 token activity. Just look at these transactions by type of address, and so the inscriptions and the BRC20 tokens will use Taproot, which is this purple line, and so that also has come down, right? So yeah, we are seeing that like less activity from that point, and the impact on fees is really evident here in this one. So you can see daily fees is the line, the purple line, and then the addresses that use Taproot are the bars, and you can see also this spike in fees when Inscription and BRC20 token activity also spiked. Now it has come down significantly. Like fees have come down from this high of daily fees around almost 600 Bitcoin in one day, more than or 90% down to right now, maybe around 53 daily total fees. So really meaningful decline in fees, and for miners, of course, it impacts miners, and that's what we're seeing here. And just the end, so, just a couple of charts about price. We were saying this. I mean, we published this yesterday, right? And so how the sell pressure for prices, the downward pressure for prices was declining, easing as the profit margins for traders basically are now around zero. So we had a really high unrealized profits for traders at the end of the last year and at the beginning of this year, and then as prices corrected, those profit margins went to zero, and this is when we say that there's less downward pressure now for prices, because there's less profits to be realized, right? To be made by selling. So, and then we saw this morning, like Bitcoin prices increasing, right? And we can see this as also how demand for Bitcoin in the US with the Coinbase premium, it also was approaching zero, right? So there's like just better demand in the US for Bitcoin in the last few weeks, right? In the last few days, actually, this is approaching zero. So yeah, that's basically what we published this week. Just talking about miners, about how they're doing in terms of fees and transaction activity on the network, and then just a little bit of how prices downward pressure has been easing, actually.
Yeah, amazing. And so if you guys would like access to this research, go ahead and sign up for an account at CryptoQuant.com. If you're an institution, please reach out to us. We definitely can help you set up trials to get access to our API to pull all this data and use it in your own models. And so awesome report. There's a lot of exciting things happening with the miners this week. We've got CleanSpark acquiring some new facilities that's going to increase their revenue by about 15%, I think. We've got the hash rate and the difficulty going absolutely insane. I think there's another adjustment coming up for like a 13% adjustment up. And then we've got, we've got ocean mining, right? We've got the new transparent ocean mining that they found another block. I think that it's their 10th one they finally found. And so lots of exciting things happening there. Leah, did you want to comment on any of that stuff?
Yeah, I mean, Julio, that was fantastic. I think just one addition to, mining that we're looking at is also Core Scientific, coming back onto the stage and looking at what, they've just announced for production operations updates. I think it was a few days ago. And just generally, I think everybody here, how do we think that these miners are preparing for the halving? Not just 2024, but I actually want to know how miners are thinking about 2024, 2028. How are you preparing now, since there's such a, ramp up period for these miners, especially from the hardware perspective. So yeah, that's also what we're looking at. We're excited, to be able to follow Core again too.
And then Key, any comments on the mining activity or any of that?
I think miners are they're not heavily selling right now, especially for US miners. If you see their on-chain wallets and their reserves. So hash rate is increasing, and they're holding. They're waiting for selling Bitcoin after the halving, not right now. It's not the right price for them.
Yeah. Nice. So yeah, and so after the halving, right, instead of 900 Bitcoin per day, it'll be 450 Bitcoin per day. So the selling pressure will definitely come down. I believe, I think the cost to produce one Bitcoin right now, energy wise, is around, I think you said 33K last time we talked. So I think it's still around that realm. And so they're still in profit, but they're sitting waiting for the halving. Maybe we'll get an all-time high before that. We'll see. We only have a couple months here to go. But anyways, let's get into the interview today, Leah. We are super excited to have you. It's an honor to have you as a guest here today. And what's great about you is you're not like a typical finance bro, finance gal, right? Wall Street gal. You are actually like an OG, like crypto Bitcoiner. Like this is cool because you come from a different realm. No, like kudos to you. Like we appreciate that, and we want to support people that have been in it a while and really truly understand the technology and what it can do for us as humans and for a better world. And so maybe give us just a quick 40,000-foot view of like your intro into crypto, how you found it, and what like turned you maybe into like maybe a maxi or something.
Definitely. And that was very sweet of you. Thank you so much. And actually, before I do that, just stepping back, that we've had a great relationship with Key, sorry, putting you on the spot, and CryptoQuant, since both companies launched. We kind of launched at the same time. We came out with a big report together when we were both, wearing too many hats as founders and trying to figure it all out together. And CryptoQuant has always been a great partner. And they were the first, data service that we used. And so great long relationship with CryptoQuant since Key and I were crazed founders back in the day. So Garrett, thank you so much. The question's always tough of when you entered Bitcoin, right? There's the question of when did you enter as a full-time career? When did you really dive in and, try to make that happen? And when did you learn about Bitcoin and start realizing the importance of the pillars around what Bitcoin means for society, for the financial future, for financial sovereignty, as well as this absolutely incredible democratic asset? Potentially, I actually think it's the most democratic asset that's ever existed in history. Anyone can buy. There's a marketplace that's, very true, and that we can check with on-chain metrics. I originally learned about Bitcoin when I was working in the sub-Saharan Africa region of the World Bank. There was a project at the time called M-Pesa, if people are familiar, which was the first SMS-based microfinance system, and it worked great. It was piloted in Kenya. It was bought by Vodafone. It was seamless. At that time, it was 2009. So obviously I heard about Bitcoin a little later. But when I learned about Bitcoin, sure, makes sense. I saw this work. I saw, how this technology is seamless. And then I learned, a bit more about the principles of Bitcoin, especially unconfiscatability. Then for me, it made total sense. So that was kind of the use case that my lens was always on. It was actually where all my passion was as well. Did a lot of work in international development. So still following all those projects that are trying to work in the developing world. Going full-time was around 2016-17 with Lucid Investment Strategies, which was a Bitcoin RIA that was specialized in actually investing in GBTC, as well as teaching about investing in Bitcoin spot for our discretionary accounts. And we, had a YouTube channel, as you do back then, and taught a lot of TA. My former partner came up with a couple of theories, technical indicators, hyperwave, Selgin system, Consensio, et cetera. So very much started in the TA maxi world. That's how I grew up in this industry, if you will. Charting like John Nash and, being a crazed person. And back then, as we all remember, it was a different game on how you conducted technical analysis. There was just so many different dynamics in that time period than there are today. In many ways, it was easier to use TA because you didn't have fundamental analysis that you could really work off of. Now you have such a plethora of data, especially with companies like CryptoQuant, et cetera, that it's just changed, which has been really cool to watch. After Lucid, I met Stephen McClurg, who's my co-founder at Valkyrie, and we set up Valkyrie in August of 2020, and it's been off to the races ever since.
Awesome. Love that story and love your path. And we appreciate what you're doing for the ecosystem in the space. And so as we lead into that, like, why Valkyrie, right? I think a lot of us know about the World War II plot of what Valkyrie was based upon. And so is there any relation to that? Like, it's a cool name. It was a cool movie. Where did the name come from? And it's a cool name, right? Like, so tell us kind of the idea behind that.
Well, so it's based on the Norse goddesses and warriors, but every 1 in 1,000 people like you do equate it to the World War II plot to assassinate Hitler. I'm happy that it was on the good side of history. It was an unsuccessful plot, but you're one of like 1 in 1,000 that go that direction rather than, the Marvel character of the, the female warrior. Oh boy.
Totally bogarted that one. Yeah.
I'll take it. It was the right side of history, just, unsuccessful mission, but sure. The thought process was was more on the female warriors. Stephen and I have Norwegian blood flowing through us, and love mythology. I absolutely love mythology. It's almost to a pathetic realm. My dog's name is Thor and my daughter's name is Athena. So there you go.
Wow.
But
Okay.
Valkyries are very interesting figures. They're really arbiters of truth and justice on the battlefield. So they were supposedly, well, it's mythology, but they would take the righteous warriors to Valhalla, which is the most amazing place ever because it was a long haul where you eat and drink and other things. But they were the ones that decided who was allowed to come up, who was just, who deserved that. So we liked that theme of providing justice and looking into the ecosystem and, creating products that were good rather than just junk in anything. So that's kind of where it came from.
Awesome. And that's so great because you're putting the metaphysical inside of your actual product, which gives it power, I believe, too, in the spiritual sense. And so you are a true like warrior princess in this realm. And so no, it's really cool to see and understand that perspective because I think it gives a lot more context to what you're doing, what your mission is, what your calling is. And I love that. I absolutely love that story because it really, I think, resonates with not only us, but a lot of Bitcoiners as well. And so I have a small stash that I'm taking with me when I pass to, pay for my ticket to Valhalla. So
Yeah.
I have a certain stash that is going to the grave with me, so I can punch my ticket to Valhalla when I'm ready to go. Right.
Yeah, I mean, just for me, a question will be, after the launch of the ETFs, I mean, how your impression, what's been your impression of how the things are going with the ETF launches, and how much capital is coming to these new products, and what's your perspective on that?
Extremely successful. I think that there was a very naive understanding that the launch equates with mooning, which is very silly. And there's a couple of reasons why. The way that the ETFs were approved and then launched was in such quick succession that many of the platforms where allocators buy from haven't even conducted due diligence yet. So that comes next, right? So actually in the United States, those large money allocators who want to buy actually can't yet, right? So that's all going through the process. You can buy, and it makes headlines, whether it's Morgan Stanley, et cetera, you can buy through a self-directed, but until that, those DDQs and those platforms get comfortable, the larger money actually is waiting a little bit on the sideline. So I think that that's a huge opportunity and something that everybody needs to understand. And with that said, the inflows have been remarkable. The fact that BlackRock's in the game, Fidelity has been in the game, but now with the product, et cetera, there's no small amount of capital with billions of dollars that have already gone into these projects. So, I mean, extraordinarily successful. Again, I don't think the metric of success needs to be that it hit $150,000 on launch. That's very silly and artificial to me. Also, as we're all following, GBTC hasn't shaken out yet. So there's a lot of disagreement, if you will, in the price activity in the market, I think right now, until we find some sort of stability, not just with the outflows, but also who's going to continue to hold GBTC. It's obviously still held in a lot of estates, bankruptcy estates. So there also is just some artificial holding until a strategy can, come about from some of these larger holders, as well as international holders. So I think that until that stabilizes, we're not going to find the pure price discovery that we need to have that healthy market and healthy growth. And then compound that with obviously the halving coming up, and how could you not be bullish? But I think that they've been very successful. What's successful to note is that there's been no operational issues, knock on wood, but there hasn't. These are new products using US rails, using US companies that are, totally new plumbing for an ETF in the United States, right? So I don't think it can be, understated how important it is that these, ETFs across the board, all of ours have been performing without a hitch. They've been trading really well. The spreads have been really tight. And again, the movements to and from the APs and the custodians and everything has actually been going really well. So I would mark that as a huge success as well, that from, day one until February 8th and going on, us issuers are moving forward with innovations and changes and, pivots that only make these stronger. As an example, Valkyrie just added a second custodian, BitGo. So right now we have 2 custodians for our product. And I think that we'll see other issuers make advances that will make their products even stronger. Well, and that's just a great thing. So very successful, I think.
Yeah, and just to add on that, the holdings of those ETFs are now approaching, for example, MicroStrategy holdings. So it's compare that. MicroStrategy has been buying since I think 2020, right? It's a company, but in just some days, there's been that amount of demand from these new ETFs, right? So it's just to put it in perspective in terms of how much money has come to Bitcoin.
Yeah, it's huge. It's huge. I have questions for you guys too when you're done. Just out there.
Go for it.
Well, this is off the ETF, so just shut me up at any time. But if I could ask a couple of questions. So Julio, you showed that really interesting chart of the Coinbase premium, CryptoQuant obviously, and Key being based in Korea. What's most notable right now is having that kimchi premium back. What are your guys' thoughts generally on seeing those 2 premiums? What's going to happen in Korea? Are we going to see the ARB that we used to see? Are those dynamics concerning for you at all, or just interesting while you're trying to figure out, how they shake out?
So I can answer that question. For Korean premium, it's basically from retail investors. Korean prohibits, joining crypto for institutional investors. Institutional investors basically cannot open a corporate account on Korean exchanges. So, and we have very strong capital control. That's why there's a pretty big discrepancies when it comes to price. And I think still Korean markets are altcoin driven. If you see the volume distribution, it's mainly altcoins, not Bitcoin and Ethereum. But still, we believe there's going to be huge opportunities for ETF issuers, Korean fund managers, and as biggest asset management firms. They're trying to buy Bitcoin ETFs, and then the government prohibited to buy it a month ago. I think it's going to be, they're going to be, the government will allow to buy ETFs sooner or later, I think. I have a question. Awesome. Actually. Some says, a spot Bitcoin ETF is not good for Bitcoin for the future, not your keys, not your coins, whatever, many narratives out there. So why, can you explain why spot Bitcoin ETFs are good for Bitcoin, Ethereum in the long term?
Yeah, I semi-disagree. I personally hold Bitcoin. I'm not going to tell anyone on what hardware wallets. I will throw out some that I recommend, but I think that whomever wants to hold their own keys should hold their own keys. I think that we're looking at 2 very different things. And I think that a lot of participants in the market are making that distinction that, the ETFs, you're holding it through your brokerage, et cetera. It's not your keys, not your coin. That is very different than when it first came out, which was Trace Mayer back in, I want to say 2018, when the exchanges were blowing up, right? And Quadriga was happening and all these different things. So keeping your key, your coins on those exchanges, and there was a lot of rehypothecation, was very different. I think that the ETFs were, again, it's being audited every single day. And you're using, verified custodians. Coinbase is a very, reputable company, and BitGo, and you're using cold storage. For people that want the ETFs, I think those are very interesting. End of the day, if you want to custody your own Bitcoin, you custody your own Bitcoin. That's wonderful. I do it myself as well. So I think that it's only a net positive for Bitcoin, again, because the purpose of these ETFs is a wrapper for people who can't buy spot, right? So if you're providing this opportunity for allocators to actually gain access to Bitcoin, which does have underlying spot, so positive for the ecosystem, that's wonderful. They could not use a ledger at a lot of these institutions and banks to hold $1 billion worth of Bitcoin, right? That's just never going to happen. That's why the ETFs are beautiful. So I would say net positive, because both participants, or all participants, can do what they want. And that's the Bitcoin way, right? Is you do what you want to do. But I do also, I will say, want to see some of these hardware providers get a little more sophisticated as well. And I think that there's still a lot of issues. I will shout out, I think that Cold Card is a great one. I think CoinKite does a great job. I think Blockstream does a great job. But I do think some of the more mainstream ones actually have issues. And that's more dangerous than the ETFs. If new retail participants come in and have a hardware malfunction, which I have had on Ledger before, and it had to be forensically found and moved, and we may all have those experiences back in the day, that can't happen, right? So I actually think on the native solutions, there's a lot of advances that need to be made, or a lot of retail investors need to be more informed on which solutions to use rather than just the most marketable brands. The ETFs, I think, again, I'm diverging a little bit, Kia, on your topic, but I'm very passionate about this because they're different buyers, there's different opportunities. And if we want to teach everybody to hodl with their own keys, we actually, all of us need to do a better job of education on that too, more technical YouTubes and stuff.
As a follow-up to that question, as Bitcoiners, right, we like to have verification of that. And so, Bitwise has agreed to kind of showcase their public address, and, people worry about rehypothecation. Does Valkyrie have any plans to show proof of reserves? And what is your thoughts on rehypothecation if people aren't allowed to maybe verify the Bitcoin, that some of these ETF providers are saying they have?
Yeah. So, it's more nuanced, and no, we do not plan as of right now, due to the current security measures, to publish the address. Let's talk about it in a few months. As of right now, we don't believe that that's actually secure. And if a lot of people saw, and I love Bitwise folks, shout out Hunter and Matt, but they did receive tips that can be a little difficult when it comes to fund accounting. It makes things a tiny bit messier. So right now things are clean. What participants and audience should know is, again, this is being verified by auditors every single day, right? We're working with US Bank. A lot of the other issuers are working with Bank of New York Mellon. Every day, the fund admin needs to verify in cold storage that everything is actually there. So there should be some trust in the system that it's being verified by multiple counterparties every single day. There is no rehypothecation allowed. I would not see this as BlockFi, Voyager, even many of the crypto exchanges that blew up, especially in Korea. You're in a country where lots blew up, where you really didn't have any visibility and no one was able to have visibility. These are, the most established traditional finance firms, maybe in the planet, including DTCC and other regulators that are actually verifying every single day. So as of now, we don't think that's a secure method. What we are focused on is diversification of custodians and ensuring that our wallets are secure. As Bitcoiners, we know that actually having more than one wallet is important. All of us know that, right? And even if you're using a cold custody, it's common practice that you'd have multiple wallets to ensure that if there was an issue, you know, you have that risk management strategy. So we don't believe that's a good strategy. You know, all of us can do different things, but at Valkyrie, we don't believe that's safe.
Awesome. I think it's great that you guys are diversifying your custodians, which is also helpful. So I think that's kudos to you guys understanding the space, that you want to diversify the custodians and make sure that you guys are tolerating that risk and managing it well.
Thank you. Appreciate it. The attack vector can come from the exchange rather than the issuer. I think all of us that come in this space from an OPSEC perspective understands that there are a lot of attack vectors. And a lot of that has always come from simple things like spoofing. Really is a powerful attack method, much more than, you know, 51% attacks. Those used to be the case on chains, but for something like custody, the simple things that you don't think of can actually, you know, be most dangerous. So it's not just trusting, you know, in the issuer, it's trusting in the OPSEC of the exchanges. And that's also why having one wallet on one custodian, you know, we think is a little concerning, but obviously we have a lot of confidence in Coinbase's, and we've done extensive due diligence, as had, you know, the rest of the issuers. But we've done annoyed them a lot on technical deep dives to feel confident.
What is the biggest hurdle for spot ETF markets, and how Valkyrie is solving the problem? Some says, I've talked with some issuers, ETF issuers, they said narrative is the biggest problem. You know, if you want to persuade fund managers, we need narratives, like the biggest narratives. What's the narrative for Bitcoin right now? And fund managers, they're just looking at the correlation stuff back in the day. Not right now. Like it was last year, I think. For now, I'm not sure, like what's the biggest priority for you, or what's the interest for fund managers, your clients?
Yeah. So I get it. I think your question is previously, what were the barriers to entry to buy from these larger allocators for the Bitcoin ETF? Yeah, I think that's a great question. I think that notoriously, as we all know, it was around, oh, Bitcoin's too volatile. I don't understand. Is it really an inflation hedge? That's what you're telling me, but I'm not seeing that. Store value versus means of payment. I'm hearing both narratives, to your point about narratives. You know, though, and then I don't know where to buy it, right? There was always the Bitcoin futures ETFs, and that made huge strides. You know, Bitto launched with $1 billion AUM. We had a very nice opening as well. But then, you know, we entered a bear market. We got punched with black eyes from industry participants, and it became, you know, an afterthought of should, you know, fund managers actually be allocating to this, you know, small nascent asset that potentially has more dangers than advantages. I think it's important for the audience to understand that an RIA, a registered investment advisor, let's take that segment, which is an important segment in the United States, is assessing all options. They're, you know, whether they are being pushed by their financial advisors, clients, financial advisors to RIAs, you know, or the CIO to buy on behalf of that client, they are assessing every opportunity they must. So whether it's real estate or fixed income, what's happening with treasuries, what's happening with the S&P, what is this bio? Maybe they're experts in pharma microcaps, right? So education, I think, is still the most important. That's why I'm so bullish that BlackRock has boots on the ground. And so do these other. Invesco notoriously has always had a very impressive distribution army as well. And only by getting boots on the ground, as well as explaining, you know, this asset, helping RIAs and allocators get more comfortable, that's when we're really going to be seeing, you know, very impressive and interesting, healthy flows. I think that large allocators may be there due to previous conversations, and now they have this vehicle, and you are seeing that with these, you know, where the AUM stands today across all the products. But if we're talking about meaningful, consistent chunks, and that's both buying and selling, creations and redemptions, you do want to see both, you know, sides of the volume. I think it's only through educating, and therefore the narrative I think that's important is the number go up narrative, which is proving to be true. So I think that is still going to be the most important narrative for allocators, which it is because they're fiduciaries. So as a fiduciary, they cannot ignore an asset that has this amount of price appreciation and now shows that it's in a wrapper that is secure and that they're able to buy. So as much as I'd love that it was around financial sovereignty, around the pillars of financial truth and all these different things, if I'm being obnoxious and plastic to what I know most of these fund managers care about, it's the fact that we've seen such exponential growth. And therefore, with this wrapper, they know how to trade it. So I do think the metric of success for that narrative will be this year. If we don't have a very successful halving and it doesn't go the way that we've said, there will be adjustments made. And they should, again, as a fiduciary, they cannot just buy Bitcoin if it's in a bear market. They cannot just hold Bitcoin if it's in a bear market. They do need to rebalance accordingly. It is also important to note that risk parameters are also very tight and set by a lot of fund managers and asset managers. So sometimes you can blow through a risk parameter with such price appreciation that managers will actually need to downsize. Even though that asset is doing great, it's doing too well. So there are some interesting dynamics that we'll see. A long way of answering your question, Key. There has been a lot of negative narratives. I think that the most important narrative now is just those growth statistics that we've seen. I think that a lot of the managers are assessing the market, seeing how things play out. They don't need to go quickly, right? And so they probably won't, and that's fine. And I think at the end of the year, when we're all back on the beach together, it'll be interesting to see, where we're at and if they did buy based on that thesis.
Well, they do say if you do not take the orange pill, you will take the orange suppository, and you get the price you deserve. So, this is an asset, look, you can no longer ignore. And I think, that's showcasing today, and it'll be even more apparent, when the number does go up eventually. And so, we've got some other questions for you. We love that your ticker is Burr, right? Money printer go Burr. And so it's like as a true Bitcoiner, right, you understand, what the Federal Reserve is doing, and that's probably another discussion. But maybe tell us, do you guys have any plans to maybe list an Ethereum ETF, an ETH ETF? Is there any things in the works for that? I know some different companies are starting to do that. What is your thoughts on that?
Yeah, I'm going to be so obnoxious and say that you'll know when when it hits the market publicly, but I can't comment on our filing. But I will say that despite being a Bitcoin maxi, true and with my heart, I do believe, or I should say, I believe that Bitcoin is an asset to itself. It is its own project, and I see other projects in a variety of lights. Some are doing very interesting things, but I bifurcate how I see both of them. Some of the other altcoin projects, and of course Ethereum, are very interesting. I do think that there's going to be a lot of strides made on that front, from a spot to other varieties around Ethereum. In Europe, you see staking, ETH ETFs, etc. So there's a lot of interesting work to be made, but you'll see when things become public with Valkyrie.
Just following up on, talk about education for the fund managers, right? Do you think that part of that education is to show them how to analyze this new asset? Maybe they don't know how to analyze it, what to look for when trying to analyze it. Where's the data for this new asset? Do you think that it's a really important thing to do with fund managers and allocators?
100%. And I think that's why your work is so important, because you're assisting with the fundamental analysis. And what's been lacking for traditional finance throughout the years is having FA fit into what they're used to seeing, and therefore being able to make that assessment accordingly. So I completely agree with you, Julio. Fundamental analysis often rules the roost in traditional finance over technical analysis, which I think is kind of funky right now on how things are playing out. So yes, I completely agree. It's through education on what's actually happening on the protocol, why it matters, deciphering it. That's really going to get to that comfortable point for the allocators. I agree.
And a follow-up on that, can you maybe give us your favorite CryptoQuant feature or why you like our data and what's so great about us?
That's a hard question for her because head of research and researchers, they've been using our platform, but maybe not Leah, right? What are you saying?
No, I mean, it is a tough one. I think that everything you guys do is great. I think your dashboard has a really sleek UI. I love that everything is very community oriented about CryptoQuant. So, the other data providers, it's very much rote data, and you guys provide that as well. But I think that, when you go to the dashboard, you see the tweets from different people and what, not even just your team. So I feel a social aspect that matters to Bitcoin. And also, it's nice to see what other people are saying. Coming from that TA world in way too many Telegram and Discord and everything chats, it was always actually very helpful to have my own hypothesis and thesis pushed back on and see other people's work. So I really like that function. And then other than that, again, kind of when, Key and I were starting out, 2020, there just wasn't great on-chain data. Glassnode was out and a couple of others. But I really liked what CryptoQuant was doing for on-chain metrics and especially miner flows. That's always been something that I always watched very specifically. TA, of course, I felt much more comfortable with, but there's no small emphasis to play on miners, especially back then. And when things were migrating out of China, later a year later, and just all those dynamics and new countries were setting up mining fields with different electricity usages. So I would say, Garrett, putting me on the spot, that I've always really liked the work you guys do on miner flows. It's a good answer though, right? Like I got a bunch of stuff I like you guys.
Yeah, we
it
try
shows
to
what a
differentiate.
fangirl.
Yeah.
I mean, it's like, I'm blushing. I like obviously a cheerleader over here.
We had to throw some questions at you, a little challenging here. No, and we appreciate that. And so what do you think is, what's your thoughts on like tokenomics, right? Like tokenizing equities, inscriptions, and then also like being an asset that's traded 24 hours a day, fitting that into kind of the Wall Street like system, like how is that going to maybe change? You think maybe they will move to a 24 hours a day type of system? A lot of questions in there, but maybe give us your thoughts on some of that stuff.
Yeah. So I'll take my first stab, but this is definitely your guys' area of expertise. So I'd love to crowdsource this answer as well. I think that we're still a ways from seeing tokenization of real world assets. Obviously, it's a high priority for most of the traditional finance banks. It's always been, some of the largest asset managers. It's the holy grail to be able to take a liquid portfolio, like a real estate portfolio, and make it liquid, right? It's like, whoa, yes, please, right? But I think that we're not there. I think that, major steps are being made. You see it in reports with Citi and Boney and Bank of New York Mellon and others, but the actual onboarding and usage of those platforms is much more sophisticated than I think it sounds. And therefore, which is great that we've been able to distill it into making it sound as simple as buying a token, or relating it to a derivative or fractionalization. But it's not that simple, as we all know. And until it's more simplistic, it's on a blockchain and rails that, traditional finance or investors feel comfortable with, wallets, et cetera. I think we're years out. As for but what are you guys thinking here? And yeah, would love to hear your thoughts on inscriptions and ordinals, since you guys are watching that all day.
I'll go first, but I believe tokenomics will be the future of the entire equity system because, we are dealing with naked shorts. We are dealing with, counterparties taking advantage of equities like the GameStop fiasco, like the Robinhood. Okay. And so people need to own their own assets so they're not being leveraged or not being gambled with. And so I believe very strongly in tokenomics to where the individual is the powers returned back to them through owning their own assets, owning their own stock certificates, right? And so I think that really changes the game of the rent seekers and the corruption that we're trying to deal with. And so I'm really bullish on tokenomics on Bitcoin specifically. And inscriptions and stuff, you know, hey, it's great. It's a free, you know, it's kind of a free world. You kind of do what you want with it. I think it's a waste of Satoshis, and I think there's going to be some rug pulls there, but hey, everybody deserves a rug they need. So
By the way, I do agree with you. I think that I'm you know, reading maybe too many traditional finance reports on what they're trying to do on tokenization of real world assets and portfolios, that it's making me a little concerned. But I do agree with you. For simplicity, there's already simple methods of doing that have been out for a very long time. Even Blockstream came out with, you know, a asset management platform on Liquid like 4 years ago. So you're absolutely right. I think I was thinking one thing, but in its simplicity, I agree, and I think that there's already some programs that are already there for people who are a little more crypto native.
yeah, there is an approved protocol from Patrick Byrne called T0 and some of the other stuff that was approved by FINRA and the SEC. Now that has, you know, not really come to in fruition yet, but we'll see what happens as we move into that future. But no, I'm super bullish on it. And yeah, I don't know, Julio, Key, you guys have any thoughts on the tokenomics?
For me, I think that what is really good or would be really good is to have the opportunity for people to trade on like different venues. Because with cryptocurrencies, I mean, for example, Bitcoin, you can trade in Coinbase or on other exchanges, Binance, whatever. But if you want to trade on like a stock, it's only trading in like one venue, right? So it's like a monopoly in that sense. And so maybe with tokenizing other assets, then there can be more venues to trade with, and it's people would have a choice, you know, to trade in whatever they want or whatever they want, right? And so that's for me, that's the an upside of that.
Democratization.
Exactly, yeah.
I came across a news that Valkyrie acquired by CoinShares recently. Congrats. So just want to know like backgrounds on this acquisition.
I can't speak much to it. It's actually going through the process right now. What was announced is that they exercised their option to acquire Valkyrie's ETF business. I will say that they're lovely, classy, and the whole team has really enjoyed getting to know them. But you'll see more when it's public, but as of right now, it's still going through that transaction.
Awesome. Well, I want to be respectful of your time, Leah. You've been a great guest. You've been a lot of fun. Everybody out there that's been watching this, go get an account at CryptoQuant.com. Go check us out. And also go check out the Valkyrie Spot Bitcoin ETF, right? The ticker is BRR, BRRR. And have faith in knowing that like you are actually supporting a real Bitcoin OG that understands the ecosystem. So if you are a holder, a self-custodial holder, and you have some money in, you know, the traditional finance world, like look up Valkyrie's Spot Bitcoin ETF and have confidence knowing that you have a warrior princess at your side that will fight for you for your entry to Valhalla. Okay. And so, yeah, I don't know, Leah, you were a great guest. This was a ton of fun. Anything you want to point out about the Valkyrie specific Bitcoin ETF that you guys, you know, are kind of like, you know, maybe want to showcase real quick to tell everybody about?
Yeah. And guys, thanks again for having me today. This is a really fun morning. Nothing particularly on our ETF, but kind of crowdsourcing a question here that if there's any research you want us to do with CryptoQuant, you know, any specific topics that, you know, that everybody thinks that we should be diving into, and any unique topics that you think that any of us haven't thought about diving into, you know, would love to do that. Would love to spin out more pieces, especially together. So that's all I got. That's all I got. But it's been great having on.
Awesome. Well, we appreciate you. We appreciate what you're doing. And I guess that is so long for now. So we will catch you later, everybody. See ya.